Okay, good morning. This is Simon with Trade and Perform Coaching, doing the market preview for the 21st of March. I'm running late. I apologize. So let's jump right into it. I've posted the charts on the blog and on the Slack channel. So let's just take a quick look and just go through the profiles real quick, and we'll work from there. And we will start on ES today. And then work our way up. Hold on one second here. Q, ES. Okay. So if we look at ES, let's erase all the lines, except for, hold on a sec, let's tag out some stuff. Let's just erase everything. Okay, so number one, yesterday, we closed below value, right, from prior day. Value was at the bottom end. We're opening, currently we're trading 28.1975, right? That's what we have. If you get above that 28.37 and change, right, and consolidate above, I'd say for 30 minutes higher, right, you have a chance of pushing back out. However, for me, the prime locations too short are the back of that anomaly right there. So that's 28.42 to 28.45.75, right? This anomaly has less strength, but still good location. Why? It's outside of fair prices. So that's 28.38 to 28.40. So I'm looking for our intraday setups out of this location to give us rolls back into value if we go across value, right? So the next thing to notice is we have excess on both. We have not a poor high, but not a lot of excess on the bottom. We have a lot of excess at the low, right? So usually we'll reject when we have good excess single prints at the bottom. We'll reject and push back into the mid. And then the mid is sitting right at 28.31 to 28.29 roughly. So the important thing about this is the buyers have been in overall control. Most of this roll down was driven by Boeing. At the end of the day, there was a news announcement. The FBI had started an investigation, and that's what caused that push lower. Yes, we are due a pullback. Yes, we've stopped one time into the upside. However, you can expect responsive buyers lower. It is very rare to have it go straight up and then take the elevator straight down. It can happen, right? But there's things in the way of that occurring. There's this anomaly right here sitting at roughly 28.12, right? You have the top of the open window sitting right there at 28.05 and a quarter. That's Dalton's Gap Fill sitting right there at 28.03. And usually the mid of the half gap, if you found it 10 times, you'd find a great trade about 8 or 9 times out of that location. This is a prime location. Additionally, when you look, ES is currently trading down 7 and a quarter, right, at 28.19. You get down to 28.04, you're going to be down that 20 to 25 points that ES is normally in a bull market where you'll normally find responsive buyers. I definitely don't want to be short in this area, so I ignore all my short signals down in this area, and I'm starting to look for longs, right? If it gets really sloppy and extends down 30, I'm still looking for reversals. So this is my basically starting here all the way through here, right? That is your prime area for longs for pushes back up, right? Even in bear markets, it's hard to push until we get to extremes beyond 20 to 30 down. And in bull markets, you generally find a response at 20 to 25 down. So that makes that a prime area, right? And then this is your next location right here. Very simple, right? Just stay relaxed. What we're looking for is two components. Is there a two-way market, right? Yesterday went up and down, but it was pretty much prior to the Fed, a straight up, straight down environment. And it wasn't very fast. It's kind of grindy with bursts. That's not my ideal trading environment. My ideal trading environment is the rotations down, the rotations up, and they're 5 to 10 points wide, and there's 3 and 4 point rotations up and down in the course of going to wherever it's going, right? If we get beyond this 28.04 to 27.95, I'll go examine it, and we'll talk in areas more specifically in this location. If we get above and manage to get past this location, this is your best possible location for a short today. I don't think we can get there, but if we can get into that 28.54 to 28.56, I'm looking for an over and under in this area, meaning we establish above, we get back underneath and backside test it for a push back in. Again, we had two wide range. You can see that range is clearly expanded on top, right, for the last 2 days. So I'm looking for that to continue. I don't trade in the first half hour. And before I forget, just so everyone's on the same page, right, we have econ at 9 a.m. leading index, 9:30 natural gas. I don't care about that, and that's it. So actually, the lack of econ after the open actually argues for a balanced day, and that wouldn't be shocking at all, right? Because people are going to push down. Hopefully, they'll be able to get a push to the downside. We'll be able to trap sellers at the bottom and force them to push back to the mid, and that would be the ideal trade back to the upside, or catch them on a trap at the upside. But again, if you have to weigh which way is easier, right? Dips to the downside and getting long and letting the market just do its thing will be easier in this environment in general than trying to force the short. The short's going to require two things: a lot of precision, right? And number two, you're going to be more apt to cover that more quickly simply because we've had a hard time rolling down, right? People, if we erase this and pull this down, right? I know there's a lot of top callers out there and we are extended, right? But look at that move up since December, right? You've had very, very brief periods of down days, most notably early March, right? But the down moves have just been very, very small, and you've just had to be laser-like to get a big extension to the downside. On the other hand, and in an area I'm not very good at, right? People who've been buying the open or buying the first dip and sitting all day long in ES, they've really been rewarded for 3 months solid now, right? So additionally, so there's one other thing I want everyone to think about, right? If let's say you got long anywhere right up to here, right? Even if the market peels off, let's say ES peeled off 50 points, would you really? So we're day trading and we get lost in the up and down of the intraday and what's going on and, the little moves. And that's fine. That's important. It's how we make our money, right? But think what it causes to actually get a fear response, right? To actually get someone to hit the button if you're a mutual fund manager, a hedge fund manager, a pension fund manager, even an individual investor. And this brings up a great point. I went for an eye exam the other day, spoke to the doctor. Doctor goes, hey, I got long between December 20th and January 4th. I just added to my portfolio in that area. I thought that was a good area. Is all he said, right? And he goes, I'm up 17% in my portfolio this year. He goes, it is great. He goes, and I go, well, where were you selling? He goes, well, if I gave half of it back, I'd get out, right? Because he goes, that would be my average up here is between 6 and 10%. I'm up 17%. I want to hold on to 6 to 10% of that gain, right? Now, doesn't mean that that can't happen. It just means that mom and pop and hedge fund managers and everyone else out there that's not day trading, those guys are not going to be very fast to hit the button. So that's the long side of the argument, right? The con to that is that we really have not built very good support on the way up, and we can take the elevator down. However, if you look, usually what generates these big gap through moves is there's a lack of point of controls underneath. And you can see clearly that we've built TPO and volume points of control all the way down. These should act as rotation, counter rotation locations, right? You can even see on the open, we're only down 2 points, right? And usually the first 30 minutes, and particularly the first 10 minutes, when we're in a volatile market, tend to be very volatile. And just looking at the dome, you can see there's just not a lot of volatility, right? So my caution would be if you are playing the short side of the trade, right? Be very precise on your entry. Be willing to scale, and do not try to knock out the home run unless it's just blatantly obvious, right? And a great example of that is when we hit news like yesterday, and if you've been short, you need to cover into those news pushes down because they're most likely going to get responsive buyers. Okay, let's roll over to NQ. So long story short, buyers are in overall control. And the first clue that might change, by the way, right? If we widen this out and we look from the most obvious swing low to where we are currently, right? And you should write this down. I don't know if I have it on the chart, but that right there, that 50-60 retrace, and there's a TPO and volume points of control, 2 sets right there, right at 27.95 to 27.80 area. That is extremely likely to get a responsive buy out of this location if you're patient, right? Or if you're a swing trader, that's where you want to be adding in your position for a push back up and a continuation, right? If we close behind it and are unable to get back above 27.95, that would be the first flash signs that we could really start rolling to the downside, but we're not there yet, right? The other good sign that we're rolling to the downside, I did get a call. Let's see, it's Thursday, Monday, Tuesday night. Somebody was calling me, telling me that they wanted me to participate in a algo that sells naked puts, right? And that they've had a phenomenal year and they're up over 70% on their puts, and that this was a great investment for me. And so that's always a sign that we've gotten a little exuberant, right? When people are selling naked puts, it's a great way to blow up. It works until it doesn't, right? And then you just have these disastrous margin calls. And long story short, that's your biggest area on this chart right now. And there's still key areas above that have not been tested on ES. Let's go sneak a look at NQ. Any questions on ES from guys in the room real quick? Again, I'm looking for the rate of rotation and the speed of rotation. Like you can see NQ, look at that. It's just escalator. Look at ES, escalator, right? These are very small bars, but there's just no sellers yet. Wait till they show up. You'll see them. You'll know they're there. You don't have to fight it, right? I know it's frustrating to sit there and not do a lot. It is more frustrating to dig a hole, right? This gives you no opportunity during the US session to get a great long location. And I'm totally fine with being long. Just let me see that they're buried. And my strong suit is not getting long while we're pushing straight up. That's all there is to it. And as a trading coach, as a professional trader, right, I want to play to my strong suits. Right? There is no right or wrong in terms of getting long, right? There's what's your strong suit for trading and how do you manage that? That's all that matters, right? And for me, there's just no point in me fighting the move straight up. And I want to see evidence that they're going to roll it back down. And I don't want to have to get lucky to get paid, right? So I'm very relaxed, plenty of time to make that stuff work. Let's go to NQ real quick. Again, the zones have already been posted. So these are just naked charts. So as you can see on NQ, we have still failed for many days now, right, in the US session to trade below prior day's low, going all the way back to the 11th of March, right? We simply can't trade below prior day's low. They tried, they didn't get one tick below. See how they came right to the low? All they needed is one more tick and they couldn't get it. Inside prior day's range, hole in profile is likely to get attempted to get filled in, right? And pretty innocuous profile on top, right? The last anomaly is up here. It's not a gorgeous anomaly, but it is the last anomaly to get repaired. It doesn't particularly stick out. It's just kind of there, right? And then you had to get past this on the downside to make it roll lower, right? So if I see it established underneath 73.70, that's the first step of me going, hey, maybe we can roll, right? But if we don't get underneath that, right, I have no doubt that some people will try to be a hero and try to make it work out of here. If you get the setup, right, and Daniel in particular comes to mind, but there's a couple people who can work those upper levels and take those losses. I'm not one of them. I don't want to force. So even if I get a short up here, I'll be scaling for 10 and 20 points and be done with it. I'll re-look at my position if we get underneath that 73.80 to how far I want to push, right? It's also important to remember the ranges, right? So yesterday we closed out at roughly 74.10. You knock off 100 points, that puts you at 73.10 right here, right? In a bull market, it's hard to get NQ past 73.10. If we get to 150, this is the most obvious location right there, 72.82 to 72.80, right? It's doubtful that we can get there, right? If you look underneath here, there's an anomaly. So we are trading, where did we close out? 74.10. You take 100, that's 73.10. It's really just going to be this repair right here into the single prints, right? That location right there. It's not considered exceptionally strong. And when you get into the single prints and there's no anomaly, what you'd really want to hang your hat on is that volume build right there. Okay, so I don't have that on my charts because I don't go off the volume profile. But when I look for evidence of where we might get a response and the TPO doesn't provide me with any answers, I go to the volume profile. So obviously 7,300 is a round number. It makes sense. So, and then the last piece is when you look at it, right? So what's the 50, 60 back? And it's way down there, right? So draw it down. There's your swing high, right? So the 50-60 sits at, it's a big area too because we've gone so straight. Okay, 72.20 to 71.60. It's almost a complete fantasy that we would get there today. Something drastic would have to happen. It would be 200 points down, but we could roll down into this area very gently over a couple of days. Again, very keen on being a responsive buyer up there. If you look above, right, and this does get broken to the upside, which it could, it's on rails, right? So let's go look and see what's to the left. I think we have to go back to October, if I remember from my notes from this morning. There we go. Okay, this is what's above. So, number one, when you look above and what's obvious, there's a top of the open window and a return to the scene of the crime going back to October 4th, okay, at 76.89, right? There's a top, bottom of the open window, Dalton's gap fill, mid of the half gap, long way away. We're not getting there today, right? What we could get to if we break the high is we could get into this right here. And this is your most, that's a double distribution from 10.9, right? And that's 74.90 to 7,500. Again, guys, y'all need to write it down because remember, I'm just trading the patterns intraday, but that's a key location to look for a reversal out of if we extend to the upside. The next question is that attainable? Well, we're currently up 12 points, 74.22. So 74.80 to 75, 74.80 to 7,500, excuse me, is totally attainable, right? If we make it above that, this chart gets repaired right here into single prints at 75.60. I can't imagine what's going to drive us up there. And then finally, this is a white zone all the way up here. High odds. That's fantasy land. I don't think we're getting up there today, so I'm not worried about it, right? So you can see the market's doing quite a good job. We're into the October period. That's where you want to go back to look at where the support resistance areas were. I don't have much else to say. It's on rails. Look for longs and let them stretch it. And what would be ideal, usually the next step, okay, so let me clarify. Usually the next step in this process, right, what everyone wants to happen is this. We go up, and then the bears want this, right? What's likely is the better question, right? And usually, so I'm going to draw this out. Okay. So the PA that's more likely is, okay, we've gone straight up, right? So usually we'll end up with one trend day down. Everyone's like, oh, it's all over, right? I'll be down 100 or 120 points. Next day, we'll dip, find responsive buyers, and then we go into this. Even if it rolls lower, it'll roll like this with constant snaps back up, finally find support and push like that. That is the most likely PA, and I can support that. So, right, it's not enough. I don't want to just tell you, well, Simon says that's what it is, so therefore that's what it is, right? That would be a little bit of bullshit. So let's erase that and go see where that happens. So if we go all the way back here and we look, right, so let's look at where we came off the top, right, back here. So see how we're just grinding. And we actually did get the vertical move to the downside there, but it only lasted, in this case, 2 days, right? Start looking. So two things that you'll notice when we did roll down, right? So first of all, notice, if you look to the left here, guys, notice there's a TPO or a volume point of control, but there's not a TPO and a volume point of control stuck together. And then look at this large void underneath. We don't have that right now, right? And that's what allows those big air gaps to occur. But even within that, on these down days, yes, there was big down stretches. There was two qualities. The rolls down, number one, came off of gaps away from balance, and we ended up with open drive lower and trend day down, right? Notice how few days, 1, 2, 3, 4. This is pretty down, right? Not one day closed on the low. Big U-turns all the way through there, right? If you go a little bit further, right, you go, but Simon, look, it did fall. By the time we actually got a close on the low and you thought, oh, it's all over, look at the next 5 days. Close well off the low, almost at the high. That one was near the low, right, but doesn't break below prior day's low. Close at the high, right, and you'll notice that the close at that high exhausted it. And then, right, so from here to here, this is where the shorting really got easy, because now you had two-way price action, and the weakness was already there and it was already broken. I.e., as I say to Daniel quite often, let them break it first. Whether you're intraday on a 5-minute chart, a one range chart, or a 30-minute chart, let them break it. Let them make it obvious. Like, you could have missed this whole roll down and killed it through here, right? And if you'll look, right, from swing high to swing low, if I can get there, 50-60 retrace, respond back down. Now, that is why, just like you got this response here, that is why I say 50-60, if you're looking for a great location for a long, right, that's a great location to look. Also, if you look at CL, CL is saying that economies, I don't care what the Fed say, CL says somewhere supply is constrained, right? Because we're pretty much going straight up on oil. There's not a direct correlation. Don't try to look and go, oh, oil's up, ES has to be up, or oil's down, ES has to go down. There's not. But in the bigger picture, oil doesn't go up when economies are struggling. It's quite the inverse, because demand drops, right? Bigger picture again, right? So, but what I do know is that oil's on rails right now, and every single dip is getting bought and pushed on, right? So, and it's a two-sided market with an upside bias, right? So it's hard to get bearish when oil's doing so well, right? So my suggestion is, if you're looking for a short, right, I want you to go one step further from that, whether it's ES or NQ. But imagine you're over here and you're so very confident, right, in here that we're going to zero. So see how we got vertical over here coming in August? Here, I'll push this over here. So this is important in all markets. See how we go vertical and you say, oh, it just can't go straight up. A, it has a history of doing it, right? B, the first break usually gets bought, right? Push to the downside. And I would have done the same thing here, by the way, right? If you look at this, this is our last. So there would have been two swing lows I would have looked at. I would have looked at this from this swing to this swing, right? And you'll see we came into the 50-60. And then from this swing to this swing. Again, I would have looked at the 50-60. And what you'll notice there is the first time we got to the 50 retrace, even though we got behind the smaller 50-60, it did get a response right off that 50 retrace. And if you look at the bigger picture 50 retrace, right, in the same area. So I'm trying to set y'all up so you know what to expect and to temper your emotions when the market does get down 100, so you don't go, oh my gosh, it's going to zero. If you'll notice from that last swing, right, we tagged the 50-60 over here. They extended the 50-60. This is the 50-60 on that. I know it's hard to see, so I'm going to make it bigger. That's the 50-60 retrace. Each time, this was a 50-60. This is a 50-60 from that swing. And it's getting a response almost every time. And I can bet you dollars to donuts this time when we finally make it to that 50-60, right? You want to have your head on straight if you're looking for longs, because the pushes out of this area can be substantial, 100 to 200 point pushes, right? So make sure you have your head on straight and you haven't blown yourself up trying to get longs, right? That you're taking entry exit stops properly and managing your risk. And then when you get in this area, really look for excuses to get long, right? Obviously on the current market, right? So if we go and look, NQ is not shockingly pushing to the highs, right? It just hasn't been ready to give it up. Everyone I know is looking for the short. Everyone I know is looking for the short. Almost no one wants to be, excuse me, almost no one is looking for the long, yet everyone keeps driving it up, right? So what does that create? When we're going straight up, the short's getting very crowded, right? And on every dip, everyone's having to try to cover very quickly. Hence, we can't get it. By the way, this is a prime area, right? From yesterday, this retest of this area for a potential short. I don't short before 9 o'clock. I don't do anything before 9 o'clock, so no big deal. But that is a prime area if you're looking for prime location. Let's go do CL real quick, and then I'll take a quick break and we'll get to work. I need to find my CL profile. Let's see if I can do that. Thank you, CL. Okay. Up one time to the upside yesterday, prior, right? If you look how the day rolled out. Oh, excuse me. You know what? 320. There we go. So look how that day rolled out, right? This is a dip right in front of the Fed. For everyone who argues that the Fed doesn't matter, the Fed matters on oil. I don't know why, but it does, right? So that's my proof. That's it. I just see it respond to economic data. I don't know why. I don't even care why. It just does, right? So long story short, we stopped one time into the upside. We got oil inventories. Everyone perceived that as bullish. Clearly, we got a little dip in front of the Fed, and then they just drove it straight into the high, right? We've been bouncing overnight, consolidating at the top end of the range, right? So when we look or we try to gauge, well, where would it be start to give us a clue that we're going to roll lower? Well, you got to get out of this to begin with, back into unfair pricing. This area right here, I'd look for responsive buyers. You got to clear this and stay underneath that. So that's 59.20, 59.50. Wow, I'm going totally blind. I've ordered new glasses. I apologize, guys. 59.20 to 59.04 area. I'd look for responsive buyers. You can see there's both a volume build. Volume needs to be filled back in this area. This can create a vacuum, but this should provide a counter rotation. Should. Again, we're looking for the setup, right? And then we're looking for, is there an availability of a two-sided market? You can see how compacted the range is so far in the U.S. This is U.S. session only, right? There's no overnight. There's no European. There's no Asia on this. That's how I trade it. Pick your poison. This is my poison. I'm good with it. I'm willing to live and die by these charts, right? So long story short, right, you can see that anomaly right there held as support in the U.S. session, right? So that's the first thing that has to go. You can see that we have a very poor high on top. See when it's across like this versus the excess at the low, right? That's a good low. That's a horrible high. It's begging to get broken, okay? So I know there's going to be people that fade it, but man, that's a hard fade and can result in a lot of pain. Not for me, okay? Once we get underneath here, I'm looking for a long here. Obviously, I'm willing to take shorts up here that set up, but they got to set up beautifully, right? And I'm willing to take a long out of here. I highly doubt we trade the whole range. If we do, that would be a change in character because we haven't done it yet where we've closed at the low, traded the whole range and closed the low. And that would cue us up for a change in character, right? And if you look down here, once we squeeze past here, see how there's this little almost innocuous anomaly sitting down here, a little volume build behind it. I'd expect a response from there. That would be almost a 120, actually it would be 150, 160, 170 tick roll down into this area. I'm looking to be a responsive buyer in that area. Again, has to have a setup, right? And then if you look at the bigger picture from the swing low prior to the gap to where we are right now, right? Here's your 50-60. The same rule applies to oil. I'll show you in a second, right? And I'd bet dollars to donuts if we ever get back down here. And that's actually a fair statement, right? Because oil can go vertical both ways, right? But we should find responsive buyers in this area. And there's an anomaly sitting right there at 57.20. That should give us a good response, right? There's an unfilled gap right here. This is the top of, behind that, top of an open window, Dalton's gap fill, untested settle price, right? I bet that we missed that unsettled price and we respond from there. Remember, that's just behind the 50-60. So you would smoke everyone on the 50-60, run the stops, get into the mid of the half gap, and run everyone back up, right? So to give you an idea of what it looks like when oil rolls to the downside, I'm going to give you a picture, right? So see right there, that goes back to 913. See how many days in a row it just keeps trucking. Everyone who's trying to find a short in here is in hell, right? And then it starts to roll down. So what's the first clue that things are different? Well, number one, right? This is your last swing low. So I'm going to do the same thing I do on every single chart. I'm going to take this to this, and I'm going to bet dollars to donuts when we get in this area, we find responsive buyers, right? Based on nothing else but that, right? Because I know so many people look for it. So what you'll see, right, is we gapped into that. So look how that worked out. We gapped into that. We came down to this anomaly, closed, right? And it was the following day that we got underneath. So see when it breaks down. So see how that breakdown occurred? We came into support, right? And if you look at that intraday, look how that day traded out. We gapped down, right? We open that up. We gapped down. They attempted a response out of that. How do I know? We gapped down. I can see these bars keep pushing back up. They're trying to push back up. They get to the 62 retrace. See that? That's right here. This is the 50. We gap down, so you have to contend with the potential open drive lower in the U.S. session. We get to the 62 retrace right there. See how there's a TPO and volume point of control sitting right here. We respond between those 2 points. They push back up. That's a good trade. If you found location here, this is rotation from, right? So just be aware, because we're day traders, right? 72.43 all the way back to 73.17. That is a 50, 67 tick trade. If that's the only trade you got all day long, you did fantastic, right? If you will also look at that, where we push back to, there's the swing high, swing low, we push back to the mid of the day. Okay, so it's pretty structured there. We closed at the low the following day. Look how this trade worked. We gapped into the 50-60, right? And see how many times they tried to push back in? They really made an effort almost every day to push back above that 50 and save it. They couldn't. And what was the open drive lower accompanied by? A gap below prior day's value, right? And notice there's no anomalies. Notice the next TPO point of control is stuck right down here. Look where we go to, right? And when we get big gaps like this, where there's no, so see how there's a big, so see on this day, I said, if we would have cleared this area here, I would point to this area as the next place the market wants to go, right? These big gaps where there's no volume points of control that are untested create big moves to the downside. And if you look, this is what it looks like. So if you want to see, that's October 11, what it looks like where it consolidates, unable to recover, and then it makes its next leg lower. So if we use that as our model, and by the way, they're just racking the NQ shorts. So I don't know who the hell's trying to short that, but they're just getting killed. So if we look at that same concept, right, and we look right now, right, there is a black hole underneath 59.90, and that's yesterday's point of control. See that? I would say if we establish underneath, right, and we can get a change in character, meaning sellers actually show up, rotations start to expand to the downside and contract to the upside, right? And then you can sneak past this because this is a valid support area. This becomes the likely target. That's a 59 to 57 rotation back down. And so the next natural question is, does this coincide with anything beyond that point of control, which I expect a response from? And lo and behold, magically, that lines up with the 50 retrace. So guess what? If you were trying to find a long here and here, right? Notice there's another, there's got to be an anomaly here. What's here? Let's see. There's a volume point of control that's untested there, not TPO. It's relatively weak, but then you have the top of the open window, mid of the half gap, and an anomaly in settle price along with Dalton's gap fill right behind it. So that's your down. These are your downside locations. This is your primary. That's your secondary. If you get lucky, and I am looking to find a way to get long in this area and really anything underneath this for a counter rotation. And then if I find on repeated tries that we're unable to get above the 50 retrace and we gap down, right? We gap down, unable to fill the gap. This to this become my next target lower, right? And do it step by step. So right now, we're stuck inside prior day's value. We're retesting the high. We have a poor high today and yesterday, right? So that's likely to get broken, okay? And we don't start getting things moving until we get underneath this area right in this little block right in here, right? If we get underneath here, we make a run here, and I need to see us actually establish underneath, hopefully backside test. And then if that all happened, then I'd go, we could flush down into 57.40. But when we're in this condition, that is highly fantasy-like to get going. So in the meantime, until that occurs, I'm looking for long setups to push, short setups to scalp. And then I want to do one last thing, right? So Randy, do you mind if I use your trading example from yesterday on ES? It's your call. If you don't want me to, I won't do it. Okay, so Randy had a short yesterday. Randy, can you tell me where your entry and stop was? I wasn't here, so I know you said it. I saw you write about it, but I don't remember exactly where you were. But if you look, and this is today's zones. Short 28.46, stop 28.49. Okay, so that was a zone. That was a support resistance zone. And if we go back there, that had to be in the afternoon, right? So you can see he almost had it perfect, right? He almost had it too far back, Wednesday, too many days. And I want to show you, because I went back and looked, how you could have hooked that up perfectly. So you got stopped almost to the tick, right? Because there was a zone. So there was a zone here, resistance zone, and it net worked, right? So if you look at that setup, right, it pushed. So now go through what you had available to you to make that trade work. If you fractal up, fractal down, right? So if you drew a line above that, if you wanted short, so you know you're in a resistance area, right? You'd either call this a close below or this the close below. I don't care which one you use, but it'd be one of those two. So your entry would have been 28.46. Same entry, right? Same entry you would have used. Your stop would have been approximately 28.50 and a quarter, 4 points, right? Entry here. Just follow the process, right? You had the right idea. You just got a little anxious on your entry. If you wait for the algo to set you up, right? There's your entry. There's your half back. There's your stop. So you entered half your position here, and you either took a scale, right, or you missed it completely and you just took the 50 back with the stop over here, right? Notice that you didn't get a fractal to the downside, right? And what you didn't want to get above. See how you had these 3 down over here? They pretty much laid out in the same place, and see how they couldn't get a green bar above with a point of control above? You could have taken either entry, and that would have given you the roll straight to the downside. You'd have killed it, right? So the reason why I want to address this, I've had this issue when I was modifying from just trading off the support resistance areas, which were very good and had a high win rate, to my entry. The risk of using this methodology is that you don't get the entry, right? Or, right, even harder, you come into the location. It actually did trigger here short, right? And it stopped you. So if you had taken this trigger right here, let's say you take this trigger, you want your stop 1 point behind the back of the zone. I don't know where the back of the zone was, but you want it 1 point behind to 2 points. Remember, it used to be 2 points behind when we were just trading the zones. But let's go play pretend land. Let's say you did get stopped here. If you reloaded here, you got paid again straight into the close, right? All the way over. If you look, that thing rolled down hard. Oh, sorry. That rolled down very hard from that location, right? Right into the close. If you look right into the 1500, right, you had a home run, right? My suggestion, or at least for my trade plan, would have been, even if A, I don't trade the Fed, which is why I wasn't here to trade, and B, I don't like to shorten the last hour. But all else being equal, and if I was willing to do those things, right, even if you'd gotten stopped here, if you were willing to re-enter on the same setup in the same resistance area, or simply adjust your stop here to make him bust the zone back over here, you'd have killed it. But you try to get it to the tick, and on Fed day, there's a reason why I don't trade Fed day, because I do get stopped to the tick. So you have to be generous with your stop, right? Or be willing to take your setup more than once. And if you'd just gone to your next setup, you'd have killed it on that downside rotation. It was a good read, right? And what you had to risk by waiting for the setup, right? What you had to risk was that it just might flip and turn, right? And that's always the anxiety. And I've gone through my trade plan, and I've just simply decided in my own trade plan, I don't take the zone blindly. I have to have the setup, and I'm willing to take the setup generally twice in the market, but I'm not willing to do it on Fed day, and I'm generally not willing to do it into the last hour. So does that help, Randy? Right. I understand that. And where was the back of that zone yesterday? I don't remember. I can go look. I have it posted on the blog. 28.50, and you got stopped 28.49 and a quarter. So you got to remember, right? Take it all the way back to the profile, right? Where you got stopped yesterday, right? This area right through here, that was your resistance, that whole thing, right? So you don't want to compromise in this area. If you're going to take it, A, it's inside prior day's value, which means it can probably be a little loosey-goosey. It's at the prior day's volume point of control and TPO point of control, which means it tends to be choppy, right? And so you have two choices on that. Don't trade there, or know that you're going to have to work that trade maybe more than once, right? There's no easier way to explain that versus, right, when you look at the low back over here, when you come back to the left, right, you actually didn't make it to the, and you did. See how there's an anomaly starting right here, right? But it's on such a far stretch outside of prior day's value area and points wise, right? Look how far that stretched. So you ran, right? When we get this, well, let's see how this rolled out. Okay, look where the responses came from. 28.36 to 28.17. 36 to 17 is roughly 20 points. Respond. We go from 28.17 to 28.48. 28.13 to 48. So 13.23, 33, right? And then we get to 43. That's a 30-point rotation. ES tends to get exhausted, 20 to 30 points up, right? So that was good. We were one time into the upside, right? When you get 20 to 30 points up, you had almost everything nailed here, except you have to, if you know you're inside the prior day's volume point of control and TPO point of control, it's likely to chop in that area. They make great targets. They make harder entries. And if you'd just been willing to take that trade twice, you'd have killed it to the downside. And that's the only change I would have made. Again, I just don't want to short into the last hour. And that was pretty much a straight up rocket ship, and it was Fed day. So that's what I would chalk it up to. But you did a good job taking the trade. I would have just used the stop behind the zone. That's all. Help? Should have been behind the resistance area instead of in the middle of it. Yeah, I agree 100%. Okay, so that's it. So let's go see. It's 9:07. Let's go see if anything sets up. The first thing I can tell you is from looking at the price action, right? Again, let's get rid of this chart. We don't need it, right? So look at the PA, right? 24 hours on CL, right? That's not a weak chart, right? That chart's making higher highs and higher lows still. There's no impulse move lower. We haven't made it. This is the scene of the crime right here, right? Going back to oil inventories, right? They try to dip below. They haven't been able to make it below. I would want to be underneath this, right? If I was going to press anything to the short side. You have to get underneath that oil inventories because they tried to press lower, failed, and they pushed, right? Doesn't mean there's not shorts available. It just means I'm not going to press those shorts, right? And you can see we've already responded out of there, right? Number two, if you look overnight, the setups have been working actually pretty efficiently, right? Here you have shot across the bow, right? So if you look, here, I'll set that up for you when we're looking up for our settings, right? You look over here, you got a shot across the bow on the downside. You didn't get everything you wanted, but you got a shot across the bow, close above, push, right? Here's a shot across the bow going the other way. You closed underneath, backside tested. So now this worked in reverse, right? This ended up being your fractal up, fractal down. You closed underneath, and I'm going to say right here, right? Pushed. Look at the setup. Worked exactly as I lay it out when I coach you guys, right? 50, 60 back, push down. There was no setup for a reverse there. You just had to know that buyers were in overall control, right? Then when you look on that push to the upside, we didn't get a short setup in here, right, at all. You actually had two fractals parallel, which if you get above those, it tends to push, right? Just broke down. The next setup came on this 3 down. See how they tried to get above and they couldn't, and as soon as they closed below, they rolled it down. I'm not crazy about that short, but you did have the fractal up, fractal down. When you closed underneath, it did give a quick push. That's a harder place to establish because if you look to the left, that was pushing back close to where support was. If you look, 3 up, right? Fractal up, fractal down. That's 6:49 a.m. Closed above, pushed, no 50-60 back, which is why you always want to establish, right? And then if we drag it all the way to where we are right now, and if you wanted to short, right, here's your shot across the bow, right? So if I draw my line underneath that, I shot across the bow. There's my close underneath. Again, if you've got to have a bias of some sort, right? I don't see them particularly ripping it to the downside, but if you think they are going to rip it to the downside, right, that's your entry, right? What I don't have is rotations. I don't want to get jammed again today. That's your 50-60 back. When this works perfectly, we never get a point of control with a bar behind the 62 retrace. It doesn't have to. Your stop goes behind that 60-24, but you usually don't want to see when it works great. It just doesn't even get behind the 62. You can see that there's responsive sellers there. But more importantly, when you look at that chart, right, you can see that there's overhead resistance looking back to the left in this whole area, right? If we just draw starting here to here, right, we haven't been able to get above that. But you also see that on the pushes down, we've had higher highs, higher lows, and they keep responding back up, right? So you want to break this swing right now, or you want to break this swing, one of the two. And then if you look at the participation, look at that giant push. That was your last big wave. And in order to roll down, right, from the delta wave standpoint, you want to get underneath again, 59.84. And when we get underneath, see how they try to get underneath? See, they try to break it. See that? They try to get underneath that wave, and look at the divergence that pops in underneath here. You can just see it, just all the selling dried up, right? They try to make one last push to the downside. There's your shot across the bow right here. And once they get across the shot across the bow, trap back in, push, right? So you know that 59.84 is a very key level for today, right? And so if you're trying to short up here with fantasies that's going to roll all the way down on you, I'd just like to remind you that the easier trades on all markets, right? On all markets, what you're going to contend with is even if you got the short here, you're going to have to be very nifty in covering it. If you try to press this, it came right up against you, right? Look back when it actually breaks down. Right, so I'll show you. So see how this was the old swing high over here to the left? Was the old swing high, right? Notice how it presses up. See how that becomes the biggest push to the upside? We'll mark it off. Here, let's just do it from here. Biggest push to the upside, right? Right there. Starts right there. You draw a line underneath it. Okay, first push underneath gets bought, right? Then notice it establishes underneath. Do you see that? And once it establishes underneath, see how it's underneath? And now you get your 3 up. Right, so I would draw a line. I go, hey, that's 3 up, fractal down. I just draw a line underneath that. Close underneath on this bar or this bar. You can choose your poison, right? Entry, stop, right? And you're hoping for a 50-60 back, which you get just barely, right? You actually had to front run it by a tick, which is what I usually do, or 2. And then you actually get the roll to the downside, right? That's where we actually got that push down to 59.04 eventually, right? So that would have been at 48-12. And what's different here was back in October, November, December, these trades rolled into 100-point roll downs. Now they roll into 30 and 40 tick roll downs, and you just got to adjust, right? So going back and looking over here, right, the one characterization that I notice that's important to me. And someone asked me, so I'm going to repeat this. Bill asked me yesterday, Simon, when you're in the European session, and sometimes I trade overnight, he goes, you sit in the trade forever. And he's 100% correct. I do sit in the trade forever in the overnight session. And the reason why is there's fewer participants. It's not as volatile. And I don't expect random economic news to come out like it does in the U.S. session, right? U.S. session is just noisier, right? It's just smoother overnight. So when I get a trade here overnight, even though I know it might take all day long to make the grind, I'm willing to sit in it. I'm not willing to do that in the U.S. session most of the time. I want it to move relatively quickly, right? Whether it's short or long. Versus in the European session, if I get set up for the short or the long, I'm willing to park it and work the whole process very slowly. If you want to trade the European session, I think it's a great trading time. I got 2 young kids. It's pretty hard for me to do on the regular. So that's my 2 cents, guys. And in the meantime, there's your 3 up, right? So we know there's your, look at all the pushes up here, right? See these speed bars? Those are telling me, the algo's telling me, hey, they're pushing to the upside. We want to see that, right? We want to see them really try. So now if we look, just draw this out. Get a fractal trend line break. Get a fractal to the upside. You got 3 up right here. I want to get a close underneath here, and then my stop goes with a close above or back over here, depending on how aggressive you want to be. Again, I need to see someone actually be willing to sell that damn thing and then get a counter to press the short, because it's been just a tough short for me, in my opinion, right? But that would be the setup. Close underneath the 60.03, half, either stop above the 3 up, right, which would be a point of control. Notice I haven't gotten a green bar with a point of control back above. So let's pretend we were already short, right? Your stop would be on a green bar with a point of control above. So let's say you took this as your short, because we did have a fractal up, fractal down, and this was your short entry. Again, there's just no rotation, right? We draw the 50-60 back from that. So this is your entry. So this would have been your original entry. You would have added half, and you would have stopped back at that 60.24 for the roll back to the downside. That's the process, right? So now all you have to decide is whether you're willing to short when the market pretty much has a straight up attitude, right? Even though it's at 6 cents down on the day, the U.S. session has shown no willingness to sell it. So I'll wait till they show up with the sellers, and then I'll attack. I don't like shorting just a pure slow grind until I see it. And usually what happens is we get this. We get a break. They come back for one more backside test, and that's where I'm willing to short if we get that. But we got to get it first. All right, so again, there's your 3 up. Close underneath would also set you up for the roll to the downside. I don't have anything beyond that. I don't know if anyone else does. I just don't have anything beyond that. Any questions? I think that's pretty damn thorough. So let's trade for a little bit, see if anything sets up. Click, reset. You have a fractal trend line break, and now you're going to close below that 3 up. So that's the close below right there, right? You just have to be willing to live with, right? You have to be willing to live with the stop. That's it. There's nothing else to say about that. So if you look, we open that up. So you see that first setup actually worked, right? Close below the fractal, right? Right. Here's your fractal up, fractal down. Closed underneath, 50, 60 back, rolled back. Here's your last fractal to the upside. You've now actually closed with a green bar, I think, there. Up, so you need a negative bar to close underneath to really trigger that. By the way, we also triggered what? With 3 down. So now if you get above that, you'd watch for the push to the upside, right? So you do not want to be short now on a close above. It would trigger it the opposite direction, right? Does that make sense? Yeah. Okay, so there's the close underneath. That's the 3 down. We'll see if they have any legs to the downside. Again, I'm looking for the first sign of an actual impulse move lower where they're willing to roll that thing down and take some profits. I haven't seen it yet. Once I do, I'll go for it. But the setup itself worked. Again, I wasn't willing to short it when there's just no rotations in that area. All right, let's go look at NQ really quick. Oh, why is this doing this? Here we go. There we are. And by the way, if we hadn't been in a straight up rail up market, I'm more than willing to short that. But I want to see them give up the ghost first and actually punish some of the longs. Okay. Let's see. There was your shot across the bow. That was your long. That was your push. This is your 50, 60 back. And on NQ, we're into a white zone right above. Here, I'll drag this over. Again, the charts are posted, guys. Y'all should be able to see them. That 44 to 50 obviously worked as good resistance so far, right? And then we have a double support zone right underneath. It's just how the chart laid out, right? And then you'll see over here, this is your 3 across. I'll highlight it because I know y'all can barely see that. 3 across, right? This is your close on. I'd count this as the close underneath. 50, 60 back. You obviously want your stop above that white zone for a potential roll back to the downside. Again, prove to me that the NASDAQ can go down, and I will short the living crap out of it, but not until then. Okay. But that white zone did function correctly. And then if we look at ES, we actually had the zones. You can see, again, we pushed right into resistance. We're chopping. There's your shot across the bow, right? You need to close underneath that. You don't have a fractal up or a fractal down to set up a short. And you'll forgive me, I'm not extremely excited about shorting that either. So I'll just wait for the setups. Any questions? Floor's open. I think if we wait patiently, we'll see the rotations open up. What I want to see, right, in NASDAQ is I want to see that thing flying up and down 15 to 30 points fast, right? I want to go, oh, I can short that and get my 10 quickly. So I've adjusted my first scales to 7 points instead of 10 points, right? Thanks to my experience from Friday and Monday where I let profitable trades flip on me because I didn't take it. So I've chopped off 3 points off my first target. I don't like that. It screws with the RR, but you don't have a choice in this environment. And what's my favorite trade while we're here? Unless I see the quality of the trade change dramatically, I want to look for ways where traders are getting set up at the bottom to be overcommitted to the short side, trap above them, and ride it back long is my preference. It was my preference yesterday. It's my preference today. So that's my 2 cents. Oil is rolling down, by the way, out of that head and shoulders now. Right. So again, if you look how that's set up, right? Okay, I'll go help this out a little bit. All those blue bars pushing out, I pointed that out. That's good. You want to see that, right? Fractal trend line. Okay. Closed underneath. You want to get underneath this point. That's your last 3 up right here. Close underneath. There's your close underneath. You wanted a 50-60 back. I don't know if you quite got it. Let's go draw it out. You just missed your 50-60 back by a tick, and then they've started to roll it over. If you took your trade at 59.98, you were able to get a 59.80 scale. That's a decent setup, right? And I'm glad to see a little bit of loosey-goosey movement going on, because that encourages me and lets me know, hey, maybe I can trade both sides of this thing. But notice how quickly they're snapping back to the upside. This is still just simply not an easy trade to stay short. So you have to scale on the way down, or you have to do what I did on, I think it was Friday, and let a 40-tick trade roll almost all the way back against me. I think I walked out with 10 instead of 40 on the trailer. So that's it. Let's go to work and see what it sets up. There's another 3 down, 3 up, and you'll see it's been followed by another 3 down, right? So this shows there's a pretty good fight going on up here. If they can hold underneath this consolidation here, right? They push back in and reject. You get set up again over here. You could get a roll out of that area. I'm not precluding it. I'm just saying, show me some down. That's all. And then NQ's pretty much up 30 and parked. So guys on YouTube, thanks for joining. That's our trade plan for today. We haven't been getting set up very well prior to 10 o'clock. Again, we still have the London close dragging us out to 11:30. And so it's messed up the PA a little bit. I think next week we go back to normal, Bill. Maybe that's correct, I think. That our clocks get aligned and we go back to the normal close. And you wouldn't think it affects the PA that dramatically, but it actually does. So let's see what they do. And just remember, trade with a plan and don't get blown up. All right, have a risk management plan in place. Talk to everyone later and have a great day.